I had a conversation yesterday with someone that really kind of opened my eyes a little bit. It was an enlightening moment, both from the standpoint of, I guess, me assuming things, and then also realizing that maybe people don't know as much as I think they do. So let me just share it with you. Maybe this will help you. I think it might. We were having a discussion about investments, and this gentleman is a doctor. He owns 2 clinics, so obviously very well educated, owns 2 businesses. And we were talking about investments, and one of the portfolios that we were discussing was the portfolio we manage. It's all individual stocks. And I mentioned to him that it's done almost 6% better per year on average than the stock market for the last 10 years. And he said to me, well, what about an index fund? And I explained to him that an index fund can never beat the index. And he was still a little confused. And I said, well, the index is just what we call the stock market. S&P 500 was what I was referring to. And he didn't understand how an index fund couldn't beat the stock market. And I said, well, it never can, because all it does is it buys the stocks in the index. You get that minus the fee to be in the index. So in fact, you'll never beat an index in an index fund because you have that minus the cost. Now, most people can't buy the index directly without the cost, because S&P 500, for instance, is 500 different stocks. So you would have to buy 500 different companies. You would need a lot of money to do that. So a way to get into that is buying the index. However, it can't beat the index. And he was under the impression it could. And I know a lot of people like indexing, and I just want to explain that a little bit. An index fund cannot beat that particular index. Our portfolio does beat that index, but it's not in the index. Now, if you buy different indexes and build a portfolio of index funds, maybe you can beat a specific index, but now you're taking on more risk, probably and potentially, to beat that index. Our portfolio has beat that index with less risk. So it really is kind of understanding investments in general. And I think a lot of people think that an index fund or index funds is kind of the answer to everything, when in reality, more active investing sometimes can beat it. But it's really not about beating something specifically. It's about having a true understanding of how these things work and putting a plan in place that makes the most sense for you. And back to the original statement, I was enlightened. I just assumed this gentleman's a doctor. He's well educated. He owns 2 businesses, and he really didn't understand what an index fund did or how it works. He just thought, buy an index fund and I'll be okay. So if you don't really truly understand it, if you think you can own an index and beat that index, you can't. If you want to use indexes to build a portfolio, that's fine. But just understand, to beat the S&P 500, for instance, with a series of indexes, you may need to be more aggressive than the S&P, and you need to know your risk tolerance. So if you need any help, if you have any questions, maybe that confused you more. But for me, it was just, again, realizing maybe people don't know as much as I think they do sometimes. And I think for you, if you're watching this, maybe if you don't really understand how it all works, give us a call. I can explain it to you. Happy to help in any way I can.